to get tax refunds. Those losses can be used to shelter income going forward, and those losses are created, at least the loss, the $21 billion is created from the businesses being separated, i.e. the bank being sold for less than its net tangible asset value.
Now, in terms of being a potential Wells Fargo shareholder going down the road, if they do get
It's very difficult to find any good news out there. I think when we look at, first of all, we were thinking about the credit markets and what would happen there and whether or not we were at the end of that process and whether, the financial system was going to start coming back and things would look okay. Now we're into kind of round two and the negative feedback effects that people were talking about previously, where the economy is slowing down and there's a lot of negative news coming out of the U.S. economy, labor market weaker, inflation still moving higher, so consumers are not particularly well placed. And so those negative feedback loops are going back into the financial sector, and so we're dealing with that. So we've got a combination now of a weak economy, the financial sector hasn't been healed, and so things could get worse before they get better.
This month on Bloomberg Television, the countdown to the US presidential election is on. While Americans will vote, people around the world will feel the impact. From trade to the environment to security, the next American president faces issues that concern Asia. We'll explore the regional challenges every Wednesday in October when we look beyond Bush on Bloomberg Live.
$706 points, 9,619. The NASDAQ is falling 154 points right now. Taking a look at the S&P 500, it is down more than 82 points, 1,016 for the S&P 500. We're also going to show you what's happening in the two-year Treasury notes. A big rally there, a drop in yields on recession concerns. Take a look there. Also, let's just take a look at gold if we can. Taking a look rising as investors look for some safe haven in a safe haven. Taking a look at gold, it is up $37 an ounce. Now let's get more on the markets. The Dow, as I said, down more than 700 points. We have Timothy Mulholland. He is the executive director of Melamed and Associates, and he joins us from the Chicago Merc. Welcome to the program, Tim.
Good to be back. Yes.
Tim, explain to me what's going on. We're seeing this huge buying in the long bond. No surprise, but what's the catalyst today? 700 points, we got our bailout. What's going on?
Yeah, well, I think the bailout in and of itself, I think the market realizes what the problem is, and that this isn't going to be enough to solve it. So the economic weakness is driving interest rates. But you mentioned the long bond. I think the yield curve might be the more important, and that it's widening. So the spread between short-dated treasuries and longer-dated treasuries is widening, and I think that is a trend that should be noted, especially given the type of measures being taken to stem this crisis.
Does that sound like deflation to you, Tim?
No, I think what it is, it's a, and I think where the Fed funds futures are, and people are now looking for the Fed to cut interest rates. The Fed will do whatever they can to fight deflation, but I think what the steepening of the curve means is that they are going to, and it will be, they will reflate, at any cost here.
Well, it sounds reflation. Could that be another word for inflation? Let me ask you, when you take a look at that, effective Fed funds already 1%. Has the Fed lost control of the Fed funds rate?
Yeah, well, I think this is why they want to pay interest on reserves, because then they can add reserves to the system without affecting the overnight rate. So I think that's also part of the plan that should be discussed, which means that they're going to be able to add as many reserves now as they see fit without having to without the Fed funds rate being affected. But what you're seeing is an asset deflation. The Fed will fight at all costs to fight that deflation. So that's what I mean by reflationary policies, reflected in wider spreads, or what we call steeper yield curve.
Let me ask you about those wider spreads. You've been taking a look also at the reverse repo action of the New York Fed. Let me ask you, do you think that that's going to be successful? It's kind of a push-pull model.
Yeah, I mean, I think that everything is they're going to try everything. But one thing I'd say today, I saw the 2-year swap spread down in the low 140s, which is still near the high we've had, I think, in the 150s or 160s, just to give you an idea of where that's come from. And I think that's a very important spread to watch. That spread was in the low teens, maybe 12 basis points just 3 years ago, and now it's blown out towards the 150 range. So again, I think these measures will take time, but right now I think the market's realizing and almost like throwing in the towel right now, which I'm talking the equity markets, and it's causing your flight, as you can see, to the treasuries right now, gold, and even the dollar versus the euro, not the yen. The yen's an indication of this concern.
Tim, what trades do you see people putting on? Are they still shorting energy, going long treasuries?
Well, I think that the energy trade right now is definitely reflective of the stock market and the slower economy. But I think as you get closer to $85 a barrel, I think you'll see the selling pressure stop and maybe some buying take hold. And also, even in the equity futures right now, or equity markets right now, this is a capitulation type selling. So I would tend to think you're going to find some sort of support for some sort of a bounce here, maybe in large measure, maybe in response to coordinated rate cuts around the globe, which I do think is a possibility. And so what I think is you got this capitulation trade, and right now I think that, to settle down here, I think there's going to be at least a buy for a bounce on the way.
Okay, Art. Well, we'll have to look to see whether we do get that buy for a bounce. Thank you very much, Tim Mulholland, Executive Director of Melamed Associates, talking to us from the Chicago Mercantile Exchange. Energy and material stocks, they have been leading the declines in the S&P 500. All 10 S&P 500 industry groups are down. For more, let's head over to Bloomberg's Scarlett Fu. Scarlett?
Pim, it's a stampede out of equities. All 10 groups down by at least 6%. And those commodity stocks that you were referring to, materials down by 9.4% on the day, and energy stocks lower by 9.3% here, as you can see. Now, financials falling by 8%, although there are a few gainers if you look hard enough. Hartford Financial climbing 7% after that company announcing Germany's Allianz investing $2.5 billion in the insurance company, although you have seen that gain paired as we continue through the afternoon. The CME Group, the futures exchange, higher by 5.5%. Also, Intercontinental Exchange higher by some 3%. We've seen volume in September jumping on futures exchanges as investors try to hedge some of the moves that we've seen in the equity markets. Now, in terms of other potential gainers or gainers overall, I did see William Wrigley higher by 0.3% in the consumer staples group, which, by the way, is still the best performing group in the S&P 500 for the year to date, in that its losses are the smallest of the day. In terms of your overall gainers in the S&P 500, I mentioned Hartford Financial and CME Group, as well as ICE. We also have Monster Worldwide, that's higher by 2.8%. Your losers, however, on the other side, are led by National City, Ohio's biggest bank, getting a credit rating downgrade from Fitch. So that stock being hammered, down 32%. Mylan, the healthcare company, down 23%. Genworth, a financial insurance company, down 22%. Lincoln National off by 20%. AK Steel, a materials company, off by 21%. And I just want to mention very quickly, materials and energy, they are the worst performers in the past 3 months, off by about a third of their value. Pim?
Thank you very much, Scarlett Fu. Now let's go to Lindsay Arendt in Washington. We've been listening to a lot of the hearings from the House Oversight Committee on Capitol Hill looking into the investment bank Lehman Brothers bankruptcy. Lindsay Arendt has been following this testimony. Lindsay, any more details?
Well, it's so interesting, Pam. You know, obviously, Fold taking some very tough questions from lawmakers, which is not a surprise given that on Friday, when Democratic lawmakers signed the passage of the bailout bill into law, they said, we are going to try to investigate the origins of this credit crisis, find out who's to blame, find ways to hold them to greater accountability. And we're seeing that today. Dick Fold was the target of some very tough questioning. In his prepared remarks, he did put the blame for Lehman's collapse on rumors, out-of-date rules, and slow-to-act regulators. But in his verbal testimony to lawmakers, he was absolutely contrite, saying he accepted full responsibility for Lehman's demise.
I feel horrible about what has happened to the company and its effects on so many, my colleagues, my shareholders, my creditors, and my clients.
However, Dick Fold's accepting of responsibility there really did very little to sway lawmakers who were very angry about what they said was Fold's lavish lifestyle. The chairman of the committee hearing the testimony today, Henry Waxman of California, talking about his hundreds of millions of dollars in compensation since 2000, and essentially saying that Fold benefited from the system very grandly, but that he harmed the country in the meantime.
When the company did well, we did well. When the company did not do well, sir, we did not do well.
Well, Mr. Fold, there seems to be a breakdown because you did very well when the company was doing well, and you did very well when the company wasn't doing well, and now your shareholders who owned your company have nothing. They've been wiped out.
A lot of the focus in today's hearings revolving around executive compensation. And an earlier panel before Dick Fold arrived, we heard from corporate governance advocates saying excessive executive compensation is really to blame for the current credit crisis simply because they encourage reckless behavior.
What we had was an executive compensation system that created an incentive for imagining derivative securities that exploited regulatory and accounting loopholes.
Now, Dick Fold's still talking as we speak, but he did say that with the benefit of hindsight, he said several times he would have done things differently.
Wednesday on Bloomberg Television, the U.S. presidential campaign is coming down to the final weeks. With less than a month to go before the U.S. election, the candidates face direct questions from citizens in a town hall-style debate. Find out what they have to say about the financial crisis, Iraq, and their plans for the next 4 years. We'll bring it to you live on Bloomberg Television, Wednesday morning in Asia and Australia.